thousands of youngsters have congregated in India's capital to protest against the Narendra Modi government, citing rising unemployment in the country. You've got India's Reserve Bank, the central bank that has cut its benchmark lending rate by 25 basis points. This is the first rate cut we've seen since August 2017. This rate cut also gains significance because it's the first under the new RBI Governor Shaktikanta Das, who took over from Urjit Patel, who resigned in December following a shock disagreement with the Indian government over several issues. But this is a move that will certainly be welcomed by the Narendra Modi government, who's hoping to push up and buttress private consumption in the run-up to the general elections that are slated to be held in just a few months' time. But for the youngsters who are gathered here, unemployment and what the government is doing about it remains the biggest concern.
India's finance minister claimed that if there was high unemployment, people should be protesting in the streets. We're here to show him that we are unsatisfied, angry, and that we are unemployed.
The biggest fear I have is that even after finishing my PhD and studying hard for 7 to 8 years, will I actually get a job?
The government has recently dismissed reports that suggested that unemployment in India was at a 4-decade high of over 6%. And it's also hoping that this particular rate cut, which will essentially mean that banks will lower their interest rates for home loans and car loans, will give a boost to consumer spending and also be the boost that businesses need in order for India to achieve faster economic growth. But of course, whether this actually translates into any kind of gains for the Prime Minister and his party in the upcoming general elections is something we'll have to wait and watch for.
Well, let's get more on this now from Sunil Poshakwale in Birmingham. He's a professor of international finance at the Cranfield School of Management. Welcome back to the program, Sunil. So, a surprise 25 basis point cut in India under the new RBI governor. What do you think of the move? Was it needed?
No, I think it was. It's a timely move as far as I'm concerned. I mean, look, in the past, RBI has been accused of being behind the curve, being overcautious, being overestimating the inflation risks. This time, they have cut the interest rates, and I think this is primarily aimed at boosting the private consumption and investments. He fears about, they talk about, or the concerns about this has been done for the purpose of benefiting from elections are hugely overstated, because any interest rate cut is going to take time to actually have an effect, actual effect on the economy. So what you saw in the clip is a little bit of politics. But the majority view in India is quite different, actually, because this government generally has been quite good at managing the economy. They have kept the fiscal deficit under control at about 3% or 3.3% is their target for next year. Whereas, a few years ago, our fiscal deficit in 11-12, for example, was close to 6.9%. So they have been fiscally disciplined. And I think given that the economy is slowing down, the inflation, headline inflation has been coming down, that this move is actually quite timely.
Interesting. We heard there in Neha's report that the previous RBI governor had clashed on many fronts with the Modi government, from the controversial demonetisation drive to the payment of dividends to the government, billions of dollars worth. I'm wondering, this new governor, do you think that the latest move has anything to do with being amenable to the Modi administration?
Well, I mean, any government want to preserve the independence of the central bank, and I don't think this government has lost sight of that. However, both monetary and fiscal policy has to be conducted for the good of the country, and I think in that sense, if the current governor seems to have done what the government has been asking them to do, then it's probably seen as being amenable. But look, I mean, RBI, this government is the one who actually introduced the inflation targeting. In fact, the headline inflation is below 2%, which is way below 4% target that they have. So, I mean, if you look at the economic fundamentals of where India is currently, given that the oil prices are down, the economy is slowing. This move was required, and the industry champions, the leaders, have been asking actually for a 50 basis point cut, whereas the RBI has cut it only by 25 basis points. So I don't see anything fishy in here at all.
Okay, Sunil Poshakwale, we will have to leave it there, but thank you very much again for your analysis.